shares dropping 12% today, closing at $69 a share, down from a high of $78 a share at the end of last week. Why?
Yeah, that's the question. I mean, it's amazing how a little bit of, where the price was set and expectation setting has just sort of fallen away from them. I think, clearly the market just hasn't been as enthusiastic as they'd hoped sort of going into the pricing. I mean, there was that initial super high opening price, and then it's just fallen from there as people are looking at the company and really just trying to figure out, what multiple should it have? How do you think about a company that's a story-based narrative? It's one that's sort of having sort of the bulls and bears figure out where they fall. And so it's just sort of the natural settling process here.
Dan, you called this a gut punch for Lyft, breaking the IPO price, and also a gut check for the rest of these companies that are planning to go public. I mean, do you think this is more of a fair valuation of Lyft, now $19 billion instead of 22 at the end of last week?
Look, I mean, it's been a mini nightmare scenario. I mean, for this company where the red carpet's rolled out to drop below IPO price second day, it was something that I think not just tech investors, Lyft, as well as many in the Valley are watching. We continue to think the big issue here is profitability. I mean, I continue to think there's a better chance of man being on Mars than Lyft having a profit. And that's the fundamental issue that I continue to hear from investors, all day on valuation. We think from a spectrum, we have an 8-hour price target, but I think this thing could continue to trade down as now the fears about valuation continue to perpetuate.
So hang on, that's a pretty dramatic metaphor. I mean, you're basically saying you don't think Lyft will be public in our lifetime, and will be profitable in our lifetime.
Look, they're losing $1 billion this coming year. And in my opinion, the only way that they really get to profitability is autonomous vehicles, which they continue to be well behind Waymo and Uber. And that's really the issue right here for investors. The growth that the company has is phenomenal. It's a $1 trillion market opportunity, but it comes down to, from a valuation perspective, what do you pay for that? And that's why I think, if this continues to go lower, it does get very attractive, but profitability is really what caps the valuation, and that's what we continue to hear in terms of putting more and more pressure on the stock.
Now, when I interviewed the founders on Friday, Logan Green, the CEO, said two things. One, he said that Lyft will be profitable, essentially. And two, he said that self-driving cars are a long way off. I mean, Eric, you heard it. So, two sort of contradicting things. If profitability can only come with more self-driving cars and fewer drivers, how do you square those two things?
Yeah, I just don't think Lyft's founders have given a clear answer on how they get to profitability, and that's where all these questions sort of come from. There are some people that say, oh, they must mean it's when self-driving cars come around. There are others that are looking at sort of insurance and other costs, marketing, or even cutting autonomous spending. There are all sorts of ways people are looking to try and figure out, okay, how could, if everything went well, this business get to profitability? And it's the fact that people can't really figure it out for themselves that I think is making it harder for investors to just value these companies purely on revenue when they don't know at least what the story is to eventually get to profitability. And I think that's been the problem so far.